The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990. Every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They don't tell us points paid, points received, or the APR. They tell us the number you need to put into your mortgage calculator. Get that mortgage calculator on our free app, our mobile app, ronismylender.com, ronismylender.com. What did the rates do on Friday? These are what rates locked at on average. Conforming 30-year fixed, 6.059. That was down. Jumbo 30-year fixed, 6.487. That was up. FHA 30-year fixed, 5.874. That was down. VA, the best loan on the market. We thank our veterans every single day. 30-year fixed, 5.458. That was down. USDA 30-year fixed, 5.937. That was down. Every morning, as early as the data allows, we put out a special report. It is free to you. All you need to do is subscribe. rsrlinks.com/market minute. rsrlinks.com/market minute. You can get that for free. Let's see what's going on this morning in the markets. Well, the NASDAQ is now up 2.96. And let's see where our lovely bond market is doing. Now, remember, the mortgage market is, and I put this in our reports all the time, the mortgages don't follow the bonds exactly. What drives mortgages is the mortgage-backed security. But there is some influence from the 10-year Treasury. The 10-year Treasury is up 2 basis points right now to 3.78. 2 basis points is the same as 0.02%. It's easier just to say basis points. The mortgage bond is down 12 basis points. When the price on the bond goes down, that means interest rates are going up. Not excited about that, but it's not a whole lot. We're still just fluctuating around. We'll see when the jobs report comes out. We'll get some better ideas on what's going on there. But 2 weeks ago, we broke a story about a potential International Longshoremen's Association strike, which is set to go into effect 11 hours and 45 minutes from now. The International Longshoremen's Association, can I just say ILA? Largest union in North America, would impact the loading and unloading of ships at some of the largest ports. It has an impact on roughly 50% of U.S. imports. Just last week, the ports that will be impacted received $14 billion in goods. The strike can have a big impact on certain companies that import a lot, like Walmart. Additionally, roughly a third of car imports, especially those from Europe, would be negatively impacted. There are 2 ways that the strike can be resolved. An agreement is made on compensation, or the administration can evoke the Taft-Hartley Act. This act gives the president the power to intervene if it impacts the health and safety of the nation, and this would fall under that category. If utilized, it provides an 80-day cooling off period where the union employees go back to work while negotiations are made. Do you think the president is going to do that?
You know better than that.
Is the president awake? I mean, it's just an issue going on there. The White House made an official statement on the matter saying, we've never invoked Taft-Hartley to break a strike and are not considering doing so now, unquote. As far as negotiations on a resolution, they're not even talking. There's no talk scheduled before tonight. So it appears that this strike is going to happen and will not be a good thing for inflation or the economy. Hopefully it does not have as big or long of an impact as what we saw during COVID, but clearly that was one of the components responsible for the inflation we saw when supply chains were crippled. The potential inflation will be transitory and temporary. Where have we heard that before? But can be bad for the bond market and mortgage rates. On the economy, it's estimated to cost us $6 billion a day. Now, think about that. $6 billion a day. Do we really care about $6 billion a day? I mean, you think about that concept. And right now, I think we're spending $1 trillion a year just on interest on the national debt. with no one even talking about saving anything on there. Our national debt, and if you want to see it, the USDebtClock.org has it out there, $35.4 trillion. $35.4 trillion. Now, here's the issue. That works out to $104,946 per citizen. Illegals don't get charged. And $269,000 per taxpayer. What does that tell you? Well, there's a lot more citizens than there are taxpayers. So just the bottom line right there. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990.